Well, let's actually leads us to our stock of the day, because that's another one that has suffered, and not to the same extent as CSL, but it is Life360, reporting record first quarter results with total revenue climbing 38% to 143 million year on year, subscription revenue growing 32% to $108 million, and the company's advertising revenue jumping almost 330% to close to $20 million following its acquisition of Nativo. Life360 adding 201,000 paying circles, bringing the total to 3 million active monthly users, growing 17% to just shy of 98 million globally. Adjusted EBITDA increased 7% to just over $17 million. Has raised its FY26 revenue guidance to between $650 and $685 million, and lifted adjusted EBITDA guidance to between $130 and $140 million US dollars. And its international expansion is continuing. Germany, Mexico and Brazil expected to contribute more meaningfully in the second half. Now, despite those results, the market has punished the stock again today, down more than 10%, citing technical issues weighed on user growth. Michael, let's start with you. What do you think?
It's one of these out of favour, formerly high-flying tech stocks. It's a business that has basically delivered now 2 fairly decent quarterly updates, yet the market hasn't really looked favourably upon it at all. And it's probably a symptom of the fact that no one wants to be invested in tech at the moment. There's just very negative sentiment towards, all these businesses are perceived to be at risk of a significant disruption from AI, and Life360 is probably no different in that respect. It is a business that we have held in the past and did fairly well out of, but we made a decision to exit it in our managed fund just because of some of the broader negative momentum that was around the tech space. So it's in the too hard basket for us at the moment. The business itself is very high quality. It's still growing very quickly. It's just that there's been a significant re-rating, and it's hard to know when that will finally stabilise. So from mine at the moment, it's just a too hard basket, but it's a decent business.
Would you hold it if you were there?
Probably not.
You'd
I
sell.
would probably look for other areas of the market at the moment.
Okay, all right. We'll see maybe some stocks that are coming up. Howard?
Yeah, I'd agree with Michael. It's in the too hard basket. How would you make a decent prediction about how this company is going to be doing in 5 years' time? And from Teaminvest members' perspective, that's what we're always looking at. How much will this company be making in the next 5 years? And you'd have no idea here. Now, why that graph perhaps looks the way it was is before it made a profit. It's only made a profit for about a year. Before it made a profit, people could dream of whatever numbers they liked. This was going to make billions or whatever number you like to imagine. Hence, it was a story. It wasn't a business. And its share price rose dramatically, as we can see just in the last 12 months or so. Now it's come down to about where it was 12 months before. Is this a logical spot for it? I really don't know, because when we look at the numbers, we've only got 1 year of history to base it on. All the rest was a story. Now, once we've got to perhaps 3 or 4, preferably 5 years, where it's made profits that are growing, and it's no longer a story, it's a business that's survived whatever happens out there in the marketplace, then you could look at it intelligently. But I'm like Michael here, we're just going out too hard basket, and members would say, if you only want 20 or 25 companies in your portfolio, you want things you're far more certain of than this.
I'm going to take that as a double sell then for Life360, our stock of the day.